Our topic today is liquidity. Yes, you all know that before price will move, there must be someone else stop loss taken out before price will move. This, if you don't understand where this liquidity is resting, it will be the liquidity to pay the top 5% of traders who are participating. Just look at this. There's a millions of people who are participating, $5 trillion in this market forex, but they say there's only 5% are making it. Unprofitable traders are the one they are using their money to pay this top 5% 5%. So that is why you need to understand what move this market. You know, in a country, we need money to survive. Do you understand? You need money to move, because this forex you are doing, this currency pairs you are trading, or gold, mental, anything you are trading, it is all about money. It is people currency. So for this thing to happen, there must be a more money involved, and that money involved. So let me take for instance, if you are a businessman now, if you are a businessman, you would like to, sell things high, and when you are selling things high, when you achieve someone, you are making profit. Do you understand? You like taking people money to profit, like take it in a like this is legal way, not illegal way. So you will buy small price and sell it in high. So that is where the big banks knows that this is where the small traders don't understand, because if you go online, they teach you support and resistance, break and retest, all these things. They have already know what all these online mentors teaching you, all these things they are teaching you. So they have decided to, those places that they know that the price will move, they will first of all initiate you to buy, and then they will stop you out. Today I'm going to simplify this liquidity for you guys. I'm going to be breaking it down bit by bit, so that even a goat, even a fowl can even understand what I'm saying. So what is this liquidity? First of all, before we discuss liquidity, I want you to understand that there are three types of liquidity. Yes, there are three types of liquidity. We have transactional liquidity, we have structural liquidity, and inducement. Let me give you. So we have three types of liquidity. I have three types of liquidity. First one is transactional liquidity. Then the second one is structural liquidity. Guys, don't worry, I'm going to explain this, I'm going to break this thing. You will know how to use all these things. Your life will change. You will never see the market again the way you used to see it. Sometimes you imagine how, sometimes you see some traders having tighter stop loss, but your own stop loss will be big, because they understand this transactional liquidity, structural liquidity, and last is the inducement liquidity. This is how these things works. So today I'm going to be breaking it down to you guys one after the other. Let's go. Where is this duster? Okay, so let's first of all, I hope you have jotted this thing down. So let's first of all discuss about structural liquidity, transactional liquidity. Transactional liquidity is a liquidity that causes reversal. If there's no transactional liquidity, there will not be any reversal in the market. So from now to henceforth, anytime you see a transaction, anytime you see that price has already occurred transactional liquidity, you already know that you are anticipating a reversal. That is why, look at this here. You see a price making a series of lower high, then price break this price. When price break this structure here, it's called a transactional liquidity. This previous higher here is being taken out, that causes a transactional liquidity. So you will, once you see that price has breaking structure, you start anticipating a reversal for you to go up. So you already know that this is what a break of structure. This is a switch of structure, and this is a break of structure. You start anticipating a reversal. So if you're a kind of patient, if you have a strategy that can predict that price will go down, you will trade in, or you wait for the price to come at what, a discount price for you to buy. So you have understand that when price, let me say, a transactional liquidity is just like a swing structure. You understand? Our basic market structure tells us that price is making series of higher high, 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 low, low, high. So anytime price break out this previous high, is what happened? There's a transactional liquidity. You start anticipating a reversal to inside this zone for you to buy. Do you understand? So this is the previous high. If price didn't break this high, if the price didn't break this place, you can't anticipate what? A reversal. You will see price ranging around this place. Previously, it may come and here. It may come and break this low and keep on going down. But because price has break this structure, you can't, because if you understand transactional liquidity, you can't go here and buy at this point, because you know that price has already do what? Transact in liquidity. But if price was here, you can start buying here, because you know that there will be a transactional liquidity, and once price transaction, you will exist. But here now you can see that after price break this structure, there's what? A transactional liquidity. You wait for transaction. That is why you can't get inside this place, because you know it is high. There will be a what? Reversal. With this my explanation now, you can confidently wait for price. Anytime price break the structure, you will not be rushing that, hey, I've missed this trade. You already know that there will be a reversal, and that reversal, that is when you are waiting for you to catch. So that is all for transactional liquidity. So let me explain structural liquidity. This is structural liquidity. This is most important liquidity we have in the market, because if there's no structural liquidity, transactional liquidity can't hold. Do you understand? It can't hold, because transactional liquidity is the liquidity that we need for us to make money, because this is where the banks, do you understand? This is where the banks, the institutional big boss, used to catch those unprofitable unprofessional traders. They will trap them there. This is how this liquidity always occur. Let me say, for instance, this is price making a series of this. Price break this structure. You already know that price has already transact. But before this price transact, there's always something that happen here. It always occur in three types. Let me give you the three types. The way it always occur. First structure, it occur like this. It will occur like this. So before it will break this high, it will just do like this. There's another one like this. And the last one is this. So this type, you in your mind, you think that these two types are the same. They are not the same. I will break them down for you guys. So see how this thing happen. This is how this always happen. Look at this this first. Let me first of all explain this. See, let me say this is your point of interest. This is point of interest that you want to buy. See how price will react. Price will making a series of lower high, lower high, lower high, lower low, lower high, lower high. To what? To your point of interest where you want to buy. Do you understand? Price will first of all move up, breaking structure. Once price break this structure, price already what transact. Then before the price transact, there's a structure that you made here before it break that structure. This is called liquidity. It's first, like when it is brand this way, people are anticipating that this is what a head and shoulder pattern. This is a head and shoulder pattern. People are start anticipating this is a head and shoulder pattern, and big banks understand that what they have to create this head and shoulder pattern for newbies that they have thought that this is head and shoulder pattern will start buying. And once price break at done, they remember that if price break this zone, you are expecting for price to hit at this zone before continuation. You understand? But the big banks understand that is why once this is what a structural liquidity. What price will do? Price will just come here because they already know that if you enter at this zone, your stop loss will be below here. It will just come like this. Yeah, just like this. There will be a structure. This structural liquidity, price will take it, then start buying. You'll be wicked. Oh God, these people have wicked me. My rich people is after me. No rich people is after you. It's because you don't understand this structural liquidity. So anytime from today henceforth, anytime you see that there's a structural liquidity, you wait for what? A price to take that structural liquidity. And know if there's no structural liquidity, know that this one becomes your structural liquidity. That is when it knows the here solid here becomes your inducement. You see price. If there's no this thing, this head and shoulder, this thing can't hold. This buy can hold. Exactly. If there's no structural liquidity, this low will be taken out. That is the third types of liquidity we have. There will be an inducement. Price will come and take out this. Will come and take out this. But if you understand the structural liquidity, you know that once price your stop loss will be below here because this is protected low, because this is the one that is when people's stop loss are. That is why price will not come to this low, because there's a structural liquidity. So starting from today, you will start looking for a structural liquidity because you know that it is protecting the last low. This structural liquidity protects the last low for price to hold. If there's no structural liquidity, there will be an inducement to take this low out. Do you understand this? I hope I'm making sense. Thank you. I hope I'm taking. If you have watched up to this point, please do me a favor by liking the video, share, and give me a thumbs up. And if you want to join my mentorship or any of my class, you can check the Telegram channel and follow me up. So if you want to be my private student, because I'm going to mentor you very well. So do you understand? See, this is structure. This is your structural liquidity. And there's another types of structure. Maybe when you come to the market, price already breaking structure and made this low and start going up. You don't need to panic. You don't need to panic because you know that if price starts moving like this, you don't need to panic because you already know that this is your last low. And this is your what? Your structural liquidity. That the price will definitely, once price will reach at this place, you will start buying from this zone because you understand your structural liquidity and you have already know that this thing that is happening here is called transactional. Is called structural liquidity. So I hope you understand this. So this will be the end of this class. I don't want this video to be there. So in my next class, I'll be discussing about the last liquidity we have, that is inducement. So guys, please, it is only your like. If this video gets up to 100 likes, I can able to do the next video. Please, I'm begging you, do me a favor by liking this video. And if you want to join my free Telegram channel or if you want to be my private student, just message me. I will add you up, then I will mentor you. Do you understand? So I love you guys.